All right, what's good, everybody? Welcome back to another video. I hope you guys have had a great weekend so far. As you guys already know, it is a new week, new opportunity to make money in the markets. So just as we always do, I'm going to break down my watch list here so far. Starting off with gold. So gold on the weekly time frame did close above our 21 SMA, and we have a very strong close above this area of previous support that we have here on gold being 1759, let's call it. Now that gold is trading back above this 1759 support, what would I obviously like to see would be for price to kind of give us a pullback back down into this area of support, call it 1760 to 1759 range, and really look for gold to maintain above these lows. If gold can continue to maintain above these lows, then we could definitely look to continue to buy gold, probably up into the next area, which we would have it be 1771 500, which is our current hour highs. So I'd like to see some form of a pullback back down to this area, which is about 60 pips. Then we could potentially look for a move that's roughly anywhere between 60 pips to about 120, 130 pips. Nothing more complicated than that. Anything under 1760 though, and if price starts to break above, or if price starts to break back under these lows, then we can easily see gold come back down into the previous zone, which would be 1730. So it's a pretty big range that we're looking at here. I mean, this range is 250 pips, but from an intraday perspective, again, I'd like to see a steeper pullback back into this area. And if price can reject the lows, then we could just simply look to buy gold back up into the highs, which would be 1771. That's what we're looking for on gold. Now, GJ did end up breaking under support and making new lows past 164 400, making lows at around 163. We look at the weekly time frame and we have a huge rejection of this weekly resistance. If you guys go back and watch the old webinars, one thing that I had basically talked about was a pullback and a retest into this area, which it did pull back into this area and actually went higher than what I anticipated it to be. But if we look at the overall average of this range, it's pretty normal. I wouldn't really say it was anything other than what I didn't expect. Then we had price come down and make new lows. Obviously, from the previous week, price is just making lower lows week after week after week. So at this point in time, I would continue to look to sell GJ, especially under this area right here where price did break this 165 500 support. Now that price is making new lows, I would actually like to see price pull back into this area and hold as resistance. I wouldn't really look to sell GJ as of right now. Again, I would like to wait for a steeper pullback into the range where we could then look to sell it back down into these lows here. If price does break above 165 500 though and break above these highs, then the next area to look for a potential rejection would be this entire zone right here, 166 900, call it 167. As of right now, I wouldn't do anything on GJ other than wait for a pullback and a retest of this area to then look to sell it back down into this 163 range, let's call it. And if price breaks that area, I would definitely look for 161 200. That's what I would be paying attention to on GJ. Now, the NASDAQ. So if we look at NAS, ultimately what we have is price reject this area of support down here at 10,600 and break above the highs that we saw in the weekly being 11,600. So although, things are looking pretty bullish as of right now, I would still be a little bit concerned because price overall, this market structure on the weekly time frame is still very bearish. It's a very bearish condition. We have a high, a low, a lower high. And now we have essentially what is a lower low, because this is obviously a lot lower than the previous low that we have. So in my head, it's kind of like anywhere in between this range, we could see a possible lower high, and then price can continue to go down. But since price is kind of maintaining under this 21 SMA, we can look for price to continue to go down. I would just wait for a lot more confirmation before really switching back over to a sell bias. Once price starts to break above it though, and we start trading above it, then that's when I would completely flip and be like, okay, you know what? We could probably start seeing more buys now, and I'll be a lot more confident taking buys. Me personally, I'm a lot better of a short seller than I am trading in a bullish condition. Don't know why. That's just how I am. I just seem to make more money in a bearish market. But as of right now, if we pay attention to the daily time frame, what we have here essentially is the highs that price just ended up closing back above. So, I mean, by now you guys should already know what we should be looking for. We should be looking for a pullback into the range, a steeper pullback, at least for price to make a low before looking and taking price long into this area over here. I definitely wouldn't be too aggressive on the position sizing, taking a trade from here because price has already made new highs after rejecting and retesting over here. So I definitely wouldn't trade this with too much of a position size. And on top of that, if price actually starts to break back under this 11,584 area right here, then price can definitely continue to go down. So basically what I would be looking for here, just to kind of keep things short and simple, if price could pull back into support, then we'll look to buy it back up into these hour highs. Once price starts to break under the support and take out the lows, I would actually look to sell it back down into the next lows, probably being 11,400. Let's call it. That's where I would look to take sells. US 30. So if we look at US 30 on the daily time frame, well, on the weekly time frame, we've actually pulled back into this previous weekly resistance range. This is a very big range to look for a possible rejection. But what we have to keep in mind that this is where the previous last, or not the previous last 2 weeks close. This is where the highest closes are on this resistance range. So we definitely can see selling pressure from this area, especially from a short-term perspective. We can already see some indecision at this level here being 33,800. So I'm very curious to see what the market, where the market's going to potentially open up. Because if the market opens up and price is trading under this range, then I'll most likely continue to look to sell it back down into the lows over here. Now, if price is trading above this range by the time the market actually opens up, I would really want to wait for price to establish that this area is going to hold as support before looking to buy it back up into the highs or possibly into the next highs. And it all depends on where the market opens up. Again, if the market opens up lower than this range, then essentially we're trading under resistance. And I would like to see if that resistance holds. Now, if that resistance holds, it'll create pretty good selling opportunity to sell it back down into the lows. But once prices, or if price starts to trade above this range, then I would really like to see if this previous resistance does hold as support, because we could definitely see that price went to test this area here and just broke straight through. And now it's actually holding as resistance over here. So I would definitely want to have a more kind of established baseline as to whether price is going to hold this area as support or as resistance, and then we move from there. Obviously, if price holds as support, then we'll look to buy it from this point to this point, possibly even this point up here, which would be the next major level. If price holds as resistance, then we'll look to sell it from this point to this point, possibly even this point over here. But it gives us a pretty decent range and pretty decent levels to trade from. We can either take buys at our previous support level over here with this overall bullish condition, or we could look to potentially just wait and see what happens around this range, see if it holds as resistance, see if it holds as support, or maybe even look to take sells from this area up here. Other than that, it's a pretty good kind of range we could look at here for targets, stop losses, and entry areas. I really wouldn't look to take any positions that don't involve these three levels here to kind of keep things as simple as possible. Again, to just kind of basically go over what I said, we're going to be looking for buys, I'm going to be looking for buys above this 33,800 range. Anything under that range, I'll continue my sell bias until at least 33,000, pretty much 33,330 down here is what I would be looking for. If price goes long, we'll look for the current hour highs or possibly even 34,125 around there, just to keep things as simple as possible. Now, does anybody have any questions?
Somebody in the chat said if you could go over S&P.
So with the S&P 500 on the weekly time frame, it's kind of the same. Overall price broke above the previous weekly highs and made new highs. And we've actually pulled back to a previous area of resistance that we have over here. Now, what I would kind of be looking for here on the S&P 500 is if you go to like a 4-hour level, what we have is this resistance range here, which obviously this resistance range in the past held pretty well. We saw price go from almost pretty much 4,000 all the way back down into the 3,900 area, which is a pretty big move. So essentially what I would be looking for is roughly the same thing. I mean, as of right now, the structure is still pretty bullish. I mean, it's holding very, very well, right? So if price can maintain under this kind of 4,000 area, I would actually look to sell it back down into these lows here and then see what happens. Definitely take my profit here. But price has the potential to go all the way down here, especially giving us some form of a steeper pullback after this huge move. That CPI, after this huge move that we saw after the CPI release, after the CPI data released, anything above 4,000, obviously we could look to buy it up into the next range, which, I mean, you could look at 4,017, then you could possibly even start to consider 4,050, then maybe even 4,067. Pretty much what I would look for. Yeah, I definitely see 3,900 being a big possibility because essentially this is just a straight impulse and it's just a break of this area. So we could definitely see price pull back down into this range, kind of consolidate for a little bit before continuing to go up in form of a higher low, if that's how we could definitely look at it. But as of right now, this would be the breakup structure of this range over here. That's definitely what I would look for.
Yo, Raul.
Yeah.
Can you go on NAS? And do you know the buys there? Go on the H1 or M30. How would you have caught that?
Same thing.
I know it's a bank holiday, but if it wasn't, how would you have entered?
Same way I pretty much would take any position. I mean, nowadays I'm gonna start. I start finding myself on the 15-minute time frame, a little bit more, just simply because I feel like it's enough detail where it's not like not giving me. It's a great combination between the 5-minute time frame and the hour time frame. So I'm gonna try and start maintaining myself on a 15-minute time frame because it does like get rid of a lot of the noise that we actually do see. But essentially, it would be kind of the same exact way I would take any position. I mean, it really depends on the timing as well. Turn on a sessions indicator just in case, right? So this is London. This will be the New York Open. So if this is the New York Open, this is the New York Open right here, 9 o'clock. So if this is the 9 o'clock candlestick, hold on. If this is the 9 o'clock candlestick and we see price kind of break above the range of break above the range of this resistance area, and we see price pull all the way back down, and then we have this huge hourly rejection. I mean, I would be on a 15-minute time frame kind of the entire time. Let's see what time this was. This was at 9:30. So this was the actual open. Once I see the actual open candlestick close like this on a doji towards the lows of the resistance range, and then we have this minor support area here as well that price is actually holding as well. My immediate thoughts would be, okay, well, since price actually held this area of support, we've broken above, made new highs, came all the way back down, retested, made new lows down here. I would look to buy it somewhere along this range here, all the way up into the highs over here. Now, the entry method will obviously depend on the volume that I see in the market, but in a situation like this, a lot of the times I may find myself entering right after this kind of doji close. But if this is a 9:30 close, it would be a little bit different. I would probably have waited. And in a situation where I would have waited, right? So I'll give you the example. This was the 9:45 candlestick, right? Once this candlestick stopped fluctuating and actually closed, and I saw price actually break kind of above these highs and make new highs, since there's a lot of exhaustion towards the upside, immediately I would go down to a 5-minute time frame and see what's kind of going on here. Essentially, what we see is a big rejection and then a pullback to the downside, and then we have price form this low over here, which it failed to break under these lows, which shows me that there's still buying pressure in this range. And essentially, what I would have done is probably bought in somewhere along price starting to go bullish yet again with my stop loss under the low, or maybe even under this area right here. I don't know if I would have put it all the way down here, but I definitely would have placed it under this support range right here. And then look to target this high, then possibly as my target one, where I would move my stops to break even, target this high, look left. Structure will always leave other clues for you to set your other targets, and then probably start targeting these structure points along the way. I would have done something along those lines. It's a little bit easier said than done when we're already looking at what happened, but in a live situation where price is still kind of fluctuating, that's most likely what I would have done. Definitely maintain the buy bias. I don't think I would have bought in right on this candlestick like I normally would have, because that's literally the 9:30 candlestick open, and then we have the 9:45 candlestick. So I definitely would have bought in somewhere along this candlestick, maybe possibly even this candlestick here. It just ultimately depends. Looking at things live is different than looking at things from a standpoint where we already see what happened.
You would have entered after the close, right?
I mean, it depends, because if I would have seen this candlestick come all the way down and then start going bullish again, I would have looked at it from a risk to reward standpoint, where if price has already rejected this area, I can go to like a 1 minute time frame and pay attention to the momentum and see what's happening on the 1 minute time frame. And depending on what type of risk I'm feeling on the position, because again, it would really just come down to risk to reward. Based off of this 15-minute rejection, I'm already looking to buy. This candlestick right here is telling me buy because we've already rejected the lows and sellers failed to make essentially price break to the downside, and we have buying pressure in this entire area. So this previous 15-minute candlestick would have told me, okay, we're going to look to buy, right? Since price is at a low and we are at previous resistance and it is holding a support. Realistically, like I would have bought anywhere, between maybe the fluctuation of this candlestick or maybe this candlestick over here. Just putting it from like a risk to reward standpoint, if price were to have started to go bullish and I really started to see a rejection, then I probably would have bought somewhere along the highs of this candlestick, placed my stops at the low. Targets would have been up here if the risk to reward makes sense. So we set it here, risk to rewards at 2.3. I mean, it makes sense, but it's a little bit harder to say when I'm not actually trading and in that situation, because I still have to determine risk. I mean, I'm a lot riskier. Well, I'll take entries a lot based off of volume. I already see my entry signal, which essentially the rejection is right here. This candlestick is the one telling me we could definitely see buys. Price is a lot higher probability of going up than going down. Then I ask myself, well, how can I enter the market and take advantage of this opportunity?
Hero, is there any specific time, like in gold, where you will wait for those fluctuations?
And gold?
Yeah, like you said, just with NAS or the S&P, when you were just talking about, is there any specific time where you will kind of wait for those fluctuations in the candles to finish, so that you can probably get in the lower time frames?
Well, on gold, I'd mainly be trading like a 30-minute time frame. I really wouldn't get in on fluctuations. I would wait until the actual rejection. Like the way I traded currencies and commodities is pretty different than how I trade indices.
All right, thank you.
Raul, what you thinking for gold?
Buys, basically, as long as price can maintain above 1760.
Raul, could you do GU?
I mean, I can, but I don't trade these pairs. So, I mean, you probably would have a more accurate analysis than I would, to be honest with you. But just solely basing things off of a technical standpoint, you go to the weekly time frame, price is broken above the 21 SMA, which, keep in mind, we look at this SMA to kind of determine what side has more volume. And since price closed above the 21 SMA, there's a higher probability that buyers have more volume at this point in time. Last week, price closed above, came down, retested this area, and went bullish, which is what I would have expected out of this area and the setup that I would have waited for. But I mean, this is kind of like a little bit of a harder situation to make like a really great hypothesis on like the hour time frame, because if price comes all the way down to here, I would pretty much be very concerned on how strong buyers are. So in a situation like this, I would kind of maintain myself on a 4-hour time frame and just wait for another pullback into this area over here to look to take buys up into this range, literally right here where current price action is at. Call it right here. So I would look to buy from this point.
Raul, when you were trading GJ, how did you determine if you were going to enter on like a 5-minute as opposed to like a 15 or 30 or hour? Was it based on how many rejections you saw, or was it based on like if you're trading like daily resistance as opposed to hourly resistance? How did you determine it?
So basically, when I took my GJ positions, what I was looking at was this previous area of resistance that we had spoken about in the webinar, where we do have this previous structure level. And essentially, what I saw was price kind of consolidating around this structure point. We have a pretty big consolidation range in between our previous structure low and our support level. So obviously, I had made the hypothesis that price has a really great chance of continuing to trade to the downside. So after identifying this consolidation here, what I noticed was that there was pretty much a median of this resistance range being right here. And essentially price just completely started to fail to break under these, or to break above these highs. And what I saw was a little bit of a shift in momentum and in structure. So basically, right once price came up into this range here, and again, this is the median right about here. Right once price came back up into this area, rejected here again. And then this bullish candlestick actually came, or no, it was this 30-minute candlestick actually came all the way into the range, and then it started to reject again on a lower time frame. And basically what I did was I started to pretty much, I took 2 short positions. I believe I took 1 short position right once this candlestick started to actually reject this area with my stop loss above these highs. And then I took another position on the way down over here after another rejection on this 15-minute time frame of this area yet again. And then price just continued to just really go down after that.
Okay, so when you used to trade it, I mean, obviously you traded it on Friday, whatever, but when you used to trade it more often, was it based on how many rejections there were, or did you have like a set time frame you would look to enter on?
I wouldn't really base it off of like, okay, I'm going to wait for a certain amount of rejections. I kind of just read what price is telling me.
Okay.
And based off of what price is telling me will make the decision whether I wait more or I enter now. And looking at this price action, there was just a lot of consolidation in this area. And it really seemed like buyers just really struggled to break above this range here. So, you know, at that point in time, it was kind of like, okay, well, most likely price is going to drop from here. And if it doesn't drop from here, then price is going to come all the way back up into here. And I'm not interested in buying this market in the current state of this price action. So, you know, I had a higher probability of winning. I made that decision, and I just simply analyzed what my potential was, what was my potential reward, and I entered the trade.
Okay.
Raul.
Bro.
It's funny because me and Claudio were in the club and we both took the same exact position.
Yeah, I saw Claudio. He was like 19K from the club. I was like, damn.
Yeah, bro. Literally, I made back the bill from the club while I was in the club.
Yeah.
That was lit.
Oh yeah, bro. I got a question real quick.
What's good?
Is it okay to like trade within your major levels?
What do you mean?
Because sometimes sometimes I'd be seeing like intraday like 1 hour like moves within the major levels. And I was wondering, like, is it okay to do that?
What do you mean? Explain a little bit better.
Let's say like there's what you call it? There's like a major level, right? And let's say price action is at that major level, right? And let's say you can see like a 1 hour break and reset. Is it okay to take that?
Yeah.
Within that level? Okay, yeah, because I'll be seeing moves like that happen sometimes.
Yeah.
But like I usually wait for like the daily rejection or like the 4 hour, and I usually miss out on those moves.
Yeah, but I mean, just know like price can always come back down and retest that area again on a higher time frame. Like, on this daily time frame, we have the break retest. On the 4 hour time frame, price can easily come back down for another retest, and that trade still be valid. It's happened to me multiple times before where literally one zone will give me 3-4 trading opportunities. There was one day where I was pretty much using the same exact setup, same level, maybe different type of entries on a 5-minute time frame. And I have recorded on I think I posted it on YouTube where I literally caught the same exact trade 5 times.
Sorry, Raul, can you mute someone? We can't. I don't know.
But I basically took like 3 trades throughout the same exact day, like, and I made money on each and every time. You know, the setup stays the same. Again, it's just probabilities.
Raul, you know what? US30. If you go back to US30, yeah, that weekly level that you got, I didn't really see it, like, because I was drawn from the daily, and it doesn't really respect if you look at the daily.
I mean, if we look at it, you got to keep in mind, like, that's just like if I were to draw a horizontal line on the 4 hour time frame, right? Essentially, let's draw a line right here at this support range, right? And I go down to a 30-minute time frame. You know, you're just going to see the data in more detail.
Yeah.
Time frame is going to have and look very different and going to give you different amounts of detail. Obviously, the weekly time frame is probably one of the more compressed time frames to look at the price action of the previous week. I mean, each candlestick is a single week versus on the daily candlestick. or on the daily time frame, each candlestick is a whole day of movement, so it's all price data.
But like if you stretch it out backwards, don't you think does it make sense? Like if you stretch that line backwards.
I mean, what makes sense to me was that a few weeks ago in August, on the weekly time frame, price came all the way up to here, failed at making new highs, closed here, and then went from 33,700 all the way down into 28,000, where people started to consider this market in a bearish market. So you're talking about from the highs all the way to the lows, and it all started with this level right here. Price dropped, I believe it's supposed to be like 29% or over 20%. So to me, this is very significant. And there's a reason why price did this in the past. So I would like to pay attention and keep in mind when price is back at this area, because we don't know what type of players are looking at this area and if price is going to go down or up from this area. Again, I'm just looking at previous data, and I'm always going to prefer what I see much more recently versus something that happened in 2021 and we're almost in 2023,
Yeah, so you're basically drawing your level of supply and demand from the weekly first, right?
I mean, I only have it marked off on the weekly because it's pretty significant to me as to why price, there's a reason why price dropped from this area all the way down into this area. And from this point, literally week after week after week, not really here, but after week after week after week, price just went bearish.
Yeah.
So I'm going to use as much data as I can to my advantage. Because
Okay. Yeah.
what we can see from here, it's going to be one of two options, right? Either price is going to drop like crazy from here, or it's going to break and continue to go up. I mean, price can only go either up or down, right? We just have to determine what side has a higher probability. And this is why we build a hypothesis on where price can potentially go. And then base if our hypothesis is correct or not, we'll make money.
Yeah. What about do you know the way when you're launching the DJI 2.0 for the indices,
Mm-hmm.
are you gonna be like having a section where you're doing live trading only for the indices? Yeah.
I mean, I only trade indices nowadays, so the regular live trading session will be part of that, of the live session.
From start to end, right? Like the way you're entering and exiting.
The problem is when I do videos like that, and I have a few, and I actually had quite a lot that I've compiled throughout the rest of the year, I can't really maintain focus when I'm trying to explain to an audience what I'm looking at. And basically what I found myself doing was just being very quiet throughout a lot of the videos. And when I look at it, a breakdown would have been more beneficial instead of the actual live video itself. So I only have
How about a voiceover?
Yeah, that's also what I thought about doing as well. Instead of just kind of like recording myself trading and being quiet as fuck, doing a voiceover on those videos. That's something that came to my attention like maybe 3 days ago that my editor told me that I should possibly do. But honestly, I'm just gonna try both, see what works best.
Yeah. Appreciate it, bro.
Hi, Raul.
Yeah.
I've done a few analyses on the pairs. Is it okay if I can just share my screen and show you? Because it'll be a lot easier to ask you the questions. Thank you.
All right, you should be good to go.
Yep. Perfect. Can you see my screen?
Yeah.
Yeah. So just from my experience from backtesting GJ, like I found that GJ loves to respect round levels like 165, 162, 500, 160, etc. So usually I trade from those regions. But one thing I struggle with, right, is for example, you see how this is a daily support, which usually people would wait for the retest for and maybe sell it down. What I struggle with is sometimes we have another daily resistance just above like this. So even if we do get the pullback into this area here and you see a bearish engulfing, well, I know it's different for every scenario, but would you put your stops above this zone, or would you take a more conservative approach and put your stops above this daily key resistance area as well, where price has rejected a few times?
What time frames do you trade?
Yeah.
No, I'm asking what time frames do you trade?
So daily 4 hour, 30-minute for entries.
So
So
go
I
back.
try and catch the intra-week moves, like hold my trades for 2-3 days, one day.
I mean, if
But
you catch
yeah,
like a weak move, you're talking about catching something. Well, essentially, like all of this is what you're trying to catch, basically, right? So
yeah,
the best way I can advise you off of this is I would look at it from a risk to reward perspective, because in a situation like this, you know, if I see price pull back, give me a break or retest, and then I decide to go short, I'm going to put my stops above what's going to invalidate that short. And if price breaks above this area here, it's going to come up into this area, making the shorts no longer valid because price could pull back even steeper. And why I want to cut my loss short. And to me, that's what works in my personal trading. And in a situation where if I were to get stopped out here, but sells are still valid, if price rejects this area, then I'll just try and sell it again here. And essentially, I'd make my loss back plus all of this potential extra profit that I gained. That's why we use risk to reward. You know, you're not always going to be 100% accurate, but when you are accurate and when you do win a trade is essentially when you want to have a positive R multiple.
yeah.
So that's kind of what I personally do. I would place my stops above the zone that you're taking the trade from. And if price breaks that, then I would just take the next trade at the next zone and place the stops above that area.
Yeah.
Because again, like we
yeah.
have like an overall range, right, of where price could potentially fall from. And that could be this entire area here, right? Sells are still valid along this area. So essentially what I do is I give myself 3 different areas. Okay, well, you know, price would go short from here, price would go short from here, price would go short from here. And if I'm wrong on 1 or 2 of them, then I want my third trade to make back the 2 times that I was wrong. That's kind of how the mindset I've adopted.
Yeah, because essentially what my thinking was that on the 4 hour, we can see there's a rejection already, a weak rejection. So what I was trying to do was maybe scale down to the 30-minute time frame and look for entries in this zone. More so not here because I feel like price has got away from my area, so my stops will be quite big. I was looking for maybe a pullback on the 30-minute, maybe get an engulfing here, another rejection, and put my stops up here to take it down.
I mean, I feel like if you're looking for intra-week moves, a 30-minute time frame may be a time frame where you're just seeing a lot of extra detail for no reason. Because if you tell me you're looking for like maybe a swing, right? Then even if you're just looking to swing, I would tell you like just stay on the 4 hour time frame. You don't got to go all the way down to the 30-minute time frame. That's just my own personal opinion.
That was kind of my question as well, because you said with Forex, you obviously use the 4 hour quite a lot in comparison to indices. So I was just wondering if, I don't know, the time frames just are generally different.
Well, I still use the 4 hour time frame when trading indices. You have to keep all time frames in mind, but I'm talking about how long he's trying to hold the position for.
Yeah, sorry.
If you're trying to hold a position for a few days, why are you going to look at a time frame where each candlestick is 30 minutes? You know, at least I could say like the hour time frame, and I'll be like, okay, you know what I mean? Sure, go for it. But if you're trying to hold a position literally throughout a week, and realistically, like you're not going to be trading very much. You shouldn't be trading on a day-to-day basis. If you're looking for a position that plays out throughout an entire week, I wouldn't even be on a 30-minute time frame. If that's the approach I was trying to take, I would just be on a 4 hour and a 2 hour.
I'll give you an example of how I use the 30 minutes. So for example, I took a sell in this region here. So when I saw, when I saw this rejection here, I think it was that. Yeah. So because it was retesting this previous support, I saw this 4 hour rejection. So then I thought, okay, let's go down. I don't usually enter on the 4 hour just because I want to pinpoint my entry. So when I see a 4 hour wick like that, then I scale down to the 30-minute time frame and I look for clean rejections. So a clean rejection for me would be something like a bearish engulfing or something like that. I think my entry was, no, it wasn't that. It was, it was this entry right here. Just because we respected that high and we formed a lower high, and usually my PA, sometimes I read PA a little bit different. With GJ, I see that sometimes it likes to do a bullish engulfing into an area to trap some buyers and literally just reverse after that. Usually it does a big candle, then a small candle, then completely reverses. So just for the 30 minute, I just try to pinpoint my entries. And then I have 4 hour take profits. For example, I think my take profit was 167,500, something like that. And my stop loss was just above the 30 minute entry. So the way I just do it is wait for 4 hour rejection, then scale down to the 30 minute time frame. But would you recommend that for like indices and stuff? Because I don't have experience for those type of pairs. Because I see they're a lot more volatile, like especially like US 30 and stuff. So in this scenario, because I don't really take like the 5 minute moves, the 15 minute moves, what I would wait for here, if I was trading this, is I can see huge rejections here. So from your videos, you say like the responsive areas for this area, I call it as a responsive area. So for me, I would maybe look for sells here, or sells if we daily closes below this area and retests here. And I would pinpoint my entry with the 30 minutes. So I would wait for a 4 hour rejection at that zone, and then I would go down to the 30 minute time frame for an entry with 4 hour take profits. But yeah, it's just I struggle with the stop loss part on the 30 minute time frame.
Honestly, I would place a stop loss above the zone that you're taking the trade from, because when price breaks that zone, why do you still want to be in the trade? That's the way I see it.
Yeah. All right. Thank you.
Yeah, no problem.
Hey, Raul.
Hey, Raul.
Yeah.
Go ahead. Oh, thanks. Just for tax purposes, are you trading under an LLC or an S corp?
I trade under an unregulated brokerage, so the government doesn't even know I'm trading until I withdraw my money into my bank account.
Okay.
If you're trading regulated though, and you're trading,
I trade futures and options.
Honestly, in that situation, I would just speak to your CPA about like exactly what you're doing, and they would probably advise you best. But I believe you don't even need to trade under a corporation unless you're managing other people's funds.
Okay, I mean, it was just like, saving for, instead of having to pay like personal income tax versus corporate tax, like saving that way.
I mean, from my experience, like with my trading income, I'm taxed as capital gains anyways. So normally what I'm not a accountant, I'm not a tax attorney, but what I do is I just set a pretty decent percentage from my initial withdrawal and whatever money I put in my bank account aside so I can pay the taxes for it. But yeah, I would just kind of speak with an accountant, to be honest with you. They'll definitely give you the best advice.
Okay.
Do you still get taxed on a non-regulated account?
You're going to get taxed regardless.
Oh, okay. I thought that was the whole point of non-regulated. Like all that.
I trade on unregulated because I get a little bit more margin, but whatever money I withdraw to my bank account is then a realized gain, and I have to pay my capital gains tax.
Gotcha.
Yes.
With stuff like Athens, can you like wire out in crypto? Or is that?
No, I mean, for me, I don't know what they do with their clients, maybe that don't live in the United States, but for me, it's all crypto. I wire it to I withdraw it to my exchange, and from my exchange, I wire it out to my account.
Sick. Cool.
Your rule for indices, when you're trading them, do you still look for rejections on the higher time frame and then drop down to an entry? Or are you mainly just sitting on the 15 or 30 and then entering from there?
My bad, can you say it again?
For indices, like in the beginning, when like during the boot camp, you were saying that you look for rejections first, like on like the hourly 4 hour 30, and then drop down. Are you still doing that for indices, or are you mainly looking on like the M15, M30 and just entering there?
To be honest, I'm mainly looking at like a 15-minute time frame. I'll always consult with the hour, and if the hour has a rejection already, then I mean, it's great, even better. But I'll always be like on a 15-minute time frame nowadays. It's kind of what I see myself doing. I see myself flipping between the 15, the 5, and the 30 the most.
Okay. But then if you're trading like GJ and stuff like that, then mainly you're looking for a higher time frame rejection and then dropping down.
Yeah, I'm mainly like on a 30-minute.
Okay. Yeah, makes sense.
Yeah, Raul.
Yeah.
Quick question. So why did you have to put 70K down on your Urus if you got like shitload of supercars? Like, don't you have like great credit? Like, did you have to put 70K down?
Well, I don't have to put 70K down, but I don't want to be paying $5,000, $6,000 a month for a car. You know what I mean? It's kind of like the same people that go and grab an FHA loan to buy a house. You only put 3.6% down. It's kind of like, if you can't afford to put more than 20% down, then you probably can't afford whatever you're buying anyways. So in my head, especially when I'm buying a liability, I don't want to be upside down on it as much as possible. So I always take a depreciation into account. For example, by the time my other Urus gets here, if I decide that I'm going to trade this Urus in for my Urus Performante, I'm going to lose like 30 grand on the Urus. Versus if I just decide to give it to my fiance, then whatever, you know? But me personally, like when it comes time to buy a car, like I'm not putting anything less than, I mean, for a Urus, for example, this Urus cost me $270,000. I put down, it was like 60 grand after taxes. My initial down payment was going to be like 50, right? So I'm financing like roughly like 200 grand for a few months. Then worst case scenario, I lose 20, 30 grand, whatever, call it a day, trading the years for the years. But I mean, the more expensive the car I get, then the bigger the down payment I'm obviously going to have, because I don't want to be financing anything more than $250,000. Me personally. You know?
That's why Q said he cashes out his cars.
Say it again?
That's why Q said he cashes out his cars, because if you get shit like that, then you should be able to afford it.
Yeah, you could buy multiple times, you know. Ultimately, it's just up to the person and how they want to manage their money. If you want to, put all of your money into a liability, then go for it. You know, if you want to buy cash. I personally would never put buy a car cash first. I'd me personally.
So what do you think of the car market now? Like everything is dropping. Like
better than me, you know.
Well, you good. Like you had the SPJ, like your car's gonna hold value, but I'm saying like all the other cars, like the market is dropping. Like G-Wagons are dropping.
What the fuck? Bro, I know people who paid 300 grand for a G-Wagon. I look at them, it's just like, wow. That's...
You bought basically a dope, what's it called? Jeep Wrangler. My bad.
I mean...
Bro, people paying over 100K sticker on Maybachs, bro.
It's crazy.
Yeah, that's crazy. That's crazy. Bro, it comes down to supply and demand, obviously. It comes down to the type of connections, at the dealership. Because the dealership that I bought this Urus from, they're going to sell it for 300, and some Joe Schmo is going to come in, 300K for a Urus, here you go. But since I have a great connection with it, I'm literally one of that dealerships. They told me I'm literally one of their best clientele. So they're like, oh, you know what? No problem. Here's 30 grand off the Urus. There you go. Enjoy. It depends who you know, what type of relationship you have.
One more question, and my last question. So let's say you're making great profits, right? And you're being consistent, and you're making like good money where you could put down on a let's say Urus or G-Wagon, whatever the case may be, but you don't have the credit because you're mad young. Like, how would you go about getting it? Would you just put down that fat down payment, but that's like mad depreciation? You know what I mean? Like, how would you go about it?
Gotta pay to play. How bad do you want it?
Got you.
How bad do you want it?
Got you.
I mean, there's so many different things you could do. Like, I'm working with a certain individual right now. We're gonna add trade lines to my credit. We're gonna improve my business credit. Like, there's so many things you could do. But fuck, I mean, you probably won't even get approved. If your credit is like average, or maybe it's brand new, you probably won't get approved for even 25% down. They're probably gonna ask you for something crazy, especially if you go like a traditional bank. But obviously, the bigger the down payment you put, the more likely your odds are of approval.
Okay. What about the lease? I mean, not lease, but loans for like 180 months and shit like that. What do you think about that?
So I know about that bank. That bank is called Woodside. They'll finance a car to you for 180 months. It's crazy.
Bruh.
Personally,
can't you get in and get out though?
Yeah, you can. You can get in, you can get out. But they like to only go off of your personal income, not your business income. So my cars are all under my business, right? Not my personal.
Oh, but I thought don't they use it personal as like a personal guarantee for your business?
No, at least from what I've heard of. I haven't personally tried getting a car with them because I don't want to be paying I don't want to be paying for a car for 180 months.
Gotcha.
I think people only use that type of bank for like really, really expensive cars. Like once you start getting over $1 million, like into the hypercar level. But even then, like, I don't know, like the way I see things is like a lot of like these regular cars, like even my SVJ, I personally wouldn't cash out. But like for the Senna that I plan on buying, the average price for a Senna is 1.5 million. I see myself putting at least $1.2 million down on it and only financing $250,000 just so banks could see I have no problem paying X amount of dollars over X amount of time and not miss a payment, you know?
So you got to put that back.
But then in my head, it's like, it's only an extra $250,000 to pay it off. So it's, I don't know. As of right now, I wouldn't really pay any of my cars off. Especially me in my situation where I just seem to get bored a lot of these cars very quickly, and I like to experience new cars, and I trade them in. Like I would lose a lot more money buying the cars cash than I would financing them, in my personal opinion, and at least from the numbers I've done.
Got you. We still waiting on that Bugatti though. Still waiting on that.
Bruh, he said 180 months, fam.
Yeah.
That's OD.
But now what they do is you just get in the car, drive it for like 6 months, get that trade line on your credit, and then you just like sell it back to the dealership or get into another supercar.
Yeah, if you have positive equity. If you're upside down, then they transfer whatever you're upside down into the other car, and then you're essentially paying more.
Yeah.
Raul, you know when people say they have an edge in the market, so they refer to their edge, what do they actually mean, and what would you say your edge is in the market?
Basically, you just have a probability of winning more than losing.
Okay.
Hey, Raul, sorry. Hey, man, I know you don't really rely on RSI divergence, but what's kind of like the lowest time frame you'll probably look at that as a confluence?
You could look at it at any time frame, to be honest with you. But
gotcha.
When I used it, like the 30-minute, the hour.
All right, thank you, brother.
Lowest time frame.
Thank you.
Yeah. Stop the recording.